Hello and welcome to Trading with Technical Indicators. My name is James Boyd. We welcome you here today. Got Scott Thompson in the chat, initials ST. Many of you know him. We welcome him. We also got Paul, Robin, Wiley, Debbie, Jay Richardson, and many others. Gary, hello to you. Ocean Life and many others. Welcome to all. Now remember, just real quick as we get going here, the information we discuss here today is provided for general informational purposes only. When and if we talk about options, remember that options are not suitable for all investors. Also remember when we talk about short options, which we probably will bring up an example or two, those can be assigned at any time up to the expiration, regardless of the in-the-money amount. We are talking about American style options, not a European style. Okay, so that's a risk. Those could be assigned prior to expiration. And also remember that investing involves risk, including loss of principal. So position sizing is very key, understanding what the loss could be, understanding maximum loss, all the above. Very important. We will highlight that. Now, also, today I want to talk about something I don't necessarily bring up as specific as I'm going to bring up here today. But Jeffrey and I were kind of talking about, Jeffrey Abelos and I were talking about on the Trader Talks this morning. Kevin Horner was out. I took the place of Kevin Horner to fill in as he was at the workshop. I got to work with Jeffrey Abelos, good guy. And we were talking kind of about sentiment, right? And I want to talk a little bit about that as far as some of the things we look at and why to gauge sentiment in the marketplace. Now, from that discussion, I also want to bring up kind of the concept that we talked about last week of correlation. I like correlation. Okay, I think it's interesting. In other words, when something does this, what might have the effect from that? And some people will do that. They call that pairs trading. They'll go long one and short the other, thinking that the correlation might hold. Okay, now we'll talk more about that. Don't feel like you have to know what correlation is yet, or pairs trading. Now, also, I want to bring up also some commodities in terms of the ag space. I want to bring up the steel space, and then we'll just lastly take a look at oil. So three main themes, okay? We'll talk about sentiment gauges, what you need to know and how to track them. Second, correlation. And third, we're going to talk about some commodity reversals. Let's go ahead here and just hop right in. Now, I want to kind of bring up some symbols. So I'm a big fan of, if I look at my personal watch list in the paper money account, if I go down to personal, you'll just see I have listed here futures. That's my first list I'm going to look at on a daily basis, okay? Second, what you're now going to notice is we go down to indexes as you would expect. And then also if I wanted to go down to, let's say, this sentiment, which is the list that I want to pull up right now. Now, what you're now going to notice is we got a couple tickers we want to watch to gauge the sentiment of market participants, okay? And so let me first kind of explain these, why I put these in here, and what do they actually tell us, okay? So the 10Y, we got the 10Y, the SOX, as you know, that's the semiconductor index. We'll talk about that in just a moment. VIX, we've talked quite a bit with Jeffrey this morning. Volatility index for the S&P 500. And you're going to look at the /6J, which is the Japanese yen. We call it the international VIX, okay? The $SPX A50R. Gosh, that sounds like a motorcycle or something like that. Does anybody know what that is? We'll bring that up, but that's going to be a kind of an important gauge here. And $SPX A100R. Okay. You know what that is? $SPX A200R. Okay. So let's kind of start with these three at the bottom first, okay? Now, if we look at this $SPX A50, this is the number of stocks in the S&P 500 that are above the 50-period moving average. And it says 0.17. So let's pull that chart up, okay? $SPX A50R, okay? Now, if I pull this up, what you're now going to see, and we'll keep the moving averages on here for just a moment. So when the market was, let's say, really quite strong, the S&P 500 was quite strong, this 0.85 represents that 85% of the stocks in the S&P 500 companies were trading above their 50-day simple moving averages. Okay, so it's very important we read that. percent of the S&P 500 companies trading above their 50-day simple moving average. Keyword is simple, okay? Trading above. So if we looked at this back there, 85% of the companies, almost 86% of the companies of the S&P 500 were trading above their 50-day moving averages. Wow. Lately, it's crashed. So there's kind of been some reason to talk about some bearish strategies, exiting and so on. Now, if you look at where we are now, we're way down here. And if you look at today, on a percent basis, what percent of the S&P 500 stocks are trading above their 50-period moving average? Answer, just 14% as of today. Now, what's the level of interest here? Well, if we go back to, let's say, a 2-year chart for, and by the way, let me kind of just bring this up. Let me kind of move this. I'll show some differences. If we go to the 100-day moving average, well, it also hit a new low here today too. Only 28% of stocks of the S&P 500 were trading above their 100-day simple moving average. That's it, 28%. That means 72% were below. Okay, now you take this back. Well, what about the 200-period moving average? Well, if you look at this, this was also a new low as well. Now, it's the lowest we've been for the year by quite a bit. Most of the time when the markets pull back, 60+% of the stocks were above their 200-period moving average. But lately, you're going to see that we not only fell down below the 0.60, but it even got down to, let's say, 0.48. Now, is that bullish or bearish? Are we kind of starting to see maybe the longer-term trend, the intermediate term trend, I should say, break down? Well, we definitely don't like this, right? The percent of stocks that fell down below the percent of stocks that fell down below the 200-period moving average had normally been like a support level of about 60%, and we have dropped down below that by almost 25%. So that means on an intermediate basis, maybe longer term, some of these charts, keyword some, have broken down. If you're getting down below the 200-period moving average, that's not normally a bullish signal, okay? Especially if we're talking about bullish momentum in the short term, days, to bullish momentum, let's say, in the weeks, okay? Now, are there any questions with this? Now, so when I look at this, we can also see this in two different ways. Number one, we could pull it up on the chart to visually see it. Where is it now compared to where it's been in the before? Sure. But we could also just kind of have this in a list, okay? Now, when I look at lists, I don't want a big, long list. I want kind of something specific I'm trying to see. I'm trying to see the sentiment here. So when I look at the SPX, the 50 at 18%, the stocks that are above the 100-day moving average at 33%, stocks that are, for example, percentage of stocks above the 200 at 50%, this tells me that we're on the sentiment gauges quite low. Now, be careful about this, okay? Normally what we're going to notice is, let me go back to the 50 period for just a second, okay? Is a lot of times people will put gauge after gauge after gauge, okay? You're going to notice that gauges start to tell you the same thing. If I go to the D real quick right there, go to time frame, and what I'm going to do is going to go to time interval, and I'm just going to go to 2 years, okay? Now, I know what we're going to see because I've been watching it, okay? But let me share with you what I've been watching. I'm going to go to the time frame, just change it to 2 years. Let's go weekly, okay? Now, when we do this, what you're now going to notice is it's going to kind of take out some of the data, try to minimize it, okay? We'll keep the moving averages on here for just a moment. Now, what I'm going to do is I'm going to overlay the VIX. Now, Jeffrey Abelos talked about this morning, right? Volatility gains, blood pressure gains, fear, okay? Well, what we should probably see is when we look at a lower or a lesser percent of stocks above their 50-period moving average, like here in February of 23 and fall of 23, we're getting back down near those areas. So if I go to the studies real quick, and I go to quick study, and I go to, let's say, compare with, and I bring up, let's say, custom study, what I'm going to do is I'm just going to bring up the VIX. Now, when you look at this chart, it's a little confusing on what are we actually looking at here? Well, this quote, this ticker, That's the candlestick chart, okay? And on the right-hand side, it's showing you the percent of stocks, okay, above the 50-period moving average. The purple is really the left-hand side. What price level are we at? Now, I want to kind of show you this because I think it's getting interesting with where we are. So when we saw the VIX, and let me kind of circle this so our eyes can pay attention to what's most important, VIX. When the VIX is high, what do you notice? There's a whole bunch of stocks, okay? So when the VIX was 25, we saw a low percentage of stocks, about 18% of stocks, above their 50-period moving average, okay? So just remember that. Now, when we saw a high percentage of stocks, stated in candlestick form, we saw a low VIX. Then when we actually saw a high VIX, we actually saw a very low percent. Only 10% of the stocks were above their 50-period moving average. That's it. 10% above their 50, okay? Now, if you go back, you're going to see that a lot of stocks above their 50-period moving average, and then VIX low, and you'll see a little spike, and then down here. But then when we get to kind of more recently, a little spike on the VIX, and what you're going to see is VIX kind of holding right around 14, 15. And then lately, what you're going to notice is low VIX again, and then that inverse relationship, okay? One goes down, the other one goes up. So you can kind of play this in one of two ways. Number one is if you think the VIX is up near highs, you might think about maybe using options, typically selling options with defined risk to try to play that correlation. So if you look at this, what you're going to notice is we're up here right around 20 on the VIX right now, and we're kind of right back down near where historically, now does the past always repeat itself? No, it doesn't. Sometimes we see data in the current day that we've never seen before, but sometimes that data can repeat itself. So some investors might be looking for some stocks that might be bucking the trend, okay? So when you get to these extreme levels of volatility, high volatility in upper ranges, and you get a low percentage of stocks below their moving averages, you might say, I'm going to start to watch. Now, I'm going to tell you what I did that was not bright. Okay, I'm just going to make fun of myself, okay? When the markets would go down, I would like mentally take a break. I would stop being disciplined. That is what I saw historically. That's not a good idea. Because what happens is the market will tend to bounce when you're undisciplined, when your focus has been broken. Why did your focus get broken? You became emotional, okay? All of a sudden, you kind of weren't reading the technical analysis, and you just kind of, these are good stocks, but they kept going down, and you really pushed back on what the charts were already showing you for days, weeks, and then you finally admit, oh, I did it wrong, and you try to hit the reset button, but the problem is you didn't trade the technicals. You didn't have exits. You didn't have position sizing, and we know where that goes. It's ugly, okay? So be careful, okay? Now, what I want to do here just real quick is I want to speak to just a couple stocks, okay? So with this theme in mind that maybe are there some stocks that might be a little oversold, okay? Now, what I want to do is the theses, okay, for any of our trade examples. We're going to right-click on the chart. We're going to right-click on the purple line, and we're going to remove study, okay? Now, guys and gals, I'm telling you, I don't think a lot of people talk about correlation. I think it's the most underrated thing out there. Now, some people talk about the advanced decline line, volume. The problem is if I did the advanced decline line, anything like that, we're going to see the same points here, okay? I think if you took this and the VIX, you're pretty much going to see what the others are showing, okay? Similar analysis. Now, what I want to do is let's kind of go back to a chart for just a moment, okay? Let's do this. And I want to bring up kind of some of the things we're seeing in the marketplace that might be trying to reverse. Now, last week we had some discussion regarding the steel industry. Areas like United States Steel, okay? Let me pull this up. And then we also, for example, had, let me pull that back up. Just put that back on. And what I want to do, there, not that one. I want to put back up. Now, by the way, this one that I'm looking at, I want to just pull up our typical. Yeah, I just want to get that back. Yeah, basic chart. No. Okay. Let me just go back, put this back on. No. Sorry, I've labeled it so many times. We're going to grab one of them. And let's just put that right there. Now, we could change that. Now, what I'm going to do is I want to kind of look at some stocks, and I could change it back. This right here is a 10-day exponential, which there were some questions on this morning. We'll talk about it. And the color of the candles are the trend, okay? The trend that it is. And what you're now going to notice is down below in red, okay? So you're going to see red colored candles. What type of trend is it? Well, that's a trend 1. Price below both moving averages, okay? You're going to see the lighter color green candles, trend number 2, and so on, okay? So that's what the oscillator at the bottom is showing. Now, the example I want to pull up is I want to look at a couple stocks in the steel space. So in the steel space, you're going to see that, now remember, and there's been the question, it was Bill Arnold, okay, who talked about, a comment I made last week was on relative strength, okay? When we talk about buying a stock, at the minimum, we want to at least see the stock above the shorter term moving average, namely the 10-period moving average, whether it's the 10-day exponential or the 10-day whole. If the price is not above that shorter term moving average, it's not going to be a stock example that we do in class. Now, I can make a comment like it's showing relative strength. That does not mean that at that moment in time, it's meeting criteria for potential entry. Okay? It's just showing relative strength. So if we're talking about something that's showing relative strength and price above the shorter term moving average, that could actually meet some criteria. Now, just because we say that doesn't guarantee it's going to go up. It's just meeting the criteria right now. Now, one thing I want to kind of show here is I want to kind of talk about, now, if someone said, James, I think the market is kind of a little weak, and I kind of want to maybe not do a full position size. That's up to your discretion, okay? If you don't like the market posture and you think the market breadth is, you don't have a lot of participation from multiple sectors, the investor might say, I'm going to invest a smaller amount of capital. Now, in 2001, I worked at a bank. Okay, I was in college, worked at a bank, 10 hours, 12 hours a week, whatever. And the biggest thing that I learned from that is when a bank is in a recessionary period, okay, they will curb how much they lend to people because they think when the economy is more volatile, the risk of being wrong or not getting the bank's money back becomes higher. So they cut the credit limits, or they could consider that. Or they maybe push down on the number of loans they give out. They become more picky. They want people that have higher incomes, higher credit scores, and so on. Well, in the world of stock investing, you could do the same thing. If we don't believe that the stock market is as strong, we just chop the position size, okay? Now, we're not going to change, if we chop the position size, that's also going to probably lower the amount of money that we're willing to risk because we probably have lesser number of shares. And if we set the stops the same, it's probably going to mean that we're risking less as well. Now, what I'm going to do with actually, in this case, X, I'm going to do a couple trades in this steel space. So why the steel space? Well, kind of seeing some of these reversals where the prices are kind of getting inside these old channels. You saw Jeffrey and I talking about this morning on COP. Now, one example that we're going to do is in our paper money account, we're normally investing about $6,000. We're going to cut it in half, $3,000. Now, what I'm going to do in this case is I'm going to come to the, now we're going to do it in both accounts, but I'm going to do $3,000 in the IRA. So I'm going to go to the trade tab, type in X. and I'm going to right click on the ask price, buy custom with OCO bracket. Now, when I come back to this chart and kind of draw some lines here, that's the line, and this is probably the line, maybe a smidge higher, okay? So maybe you're kind of right in there is what we're thinking. Maybe a midpoint of this might be right in that ballpark, about $39, okay? When does the earnings come out? The earnings comes out on February 6th. Now, what I'm going to do on the chart, I'm going to right click, going to go buy custom with OCO bracket. Now, I'm going to kind of tell you the way that some of us might like to do it, okay? And I just kind of want to show you this feature. I'm going to go over here to the pool balls for a second, click percent, go to dollar amount, and I'm going to just do half of position size, okay? $3,000. If I go right above the dollar, I'm going to see the little red icon there, snap it, and it's going to tell us that we're going to really do about 81 shares of stock. Now, if we wanted to, we could push it to 100, but for the moment, I'm just going to leave it 81 shares. Now, notice wherever we're buying, the sell limit above is $1 higher. The stop is also $1 lower than where, let's say, the entry is. I'm just going to tell you how some people like to do this, okay? If we go confirm and send, we're going to send the order. Now, what it does is actually it's going to put the order right on the screen. And I'm going to change this to this. For some reason, that IRA has had a tough time. Let's see if we can't get it to go on this one. And put it back, put that 5. So I want to kind of show you that functionality. So now notice I have not put a target yet. I have not put a stop yet, okay? Send the order. All right, now, what I'm now going to do is the margin account seems to be working fine. Now, if I go up and just drag this, now do not click on the X. You click on the X, it's going to cancel the whole order or cancel the order for the target. I'm going to left click and just drag this up. Now, this you can do on a stock trade. We're going to kind of put it right up near the top of the channel. Now, it's saying you can't do this on fractional. So if we say, look, we're just going to do 81 shares, right click on that, buy custom. I'm going to put 81 shares here. Okay, so 81 shares. Okay, the only thing we need to change is dated GTC. Go right back to what we just saw. Okay, just change it to 81 shares. Now it fills in the buy, and all we're going to do now is just drag this up to kind of the top end of the range, kind of put it up in the upper end of the range or the channel. The bottom side, what we're going to do is we're going to kind of set it underneath today's low. Where's today's low? Well, that today's low is right at about 34.71. Okay, underneath that, we're just going to kind of set it maybe like 50 cents below that, maybe like low 34. So if we take out today's low, well, that wouldn't be a great thing because that's a lower low relative to the gap that we actually just had. So trade number one is a stock that is snapping back or trying to get back inside this old channel. Now, what you're going to notice is from what we talked about last week and the week before that, a little run up and pull back, kind of a little tilted W. And this right here, the middle of the W, today we're getting above that. We made a higher high relative to this. Of all the different type of trading you could do, the W patterns are probably the least spoken about. And as far as actually like V patterns or stocks that are being bought below old channels, they're probably the least talked about. That's why we're spending some time on them. Now, what I'm going to also do is going to go to one other stock in that space, STLD. Now, STLD, if we kind of said, well, what about this one? You know, this one kind of has a humongous bullish engulfing candle, and it's engulfing where we were just on Thursday, okay? So it's engulfing where we were on Thursday, pretty strong there. I'm not going to paper trade that one, but that's another one in the steel space as well, okay? Now, what I want to do now is I want to kind of also go over some one other one in that space. So we did X, but I'm also going to bring up this one, NUE, okay? Now, what you're now going to notice on NUE is we really broke down aggressively, probably about 140 or so, okay? Now, let me kind of bring this back up in the paper money, put on the moving averages, okay? Now, if I bring this back up, now remember, the foundation, and I want to make sure no one misunderstands this. Bill, I'm talking to you, okay? The foundation of what we're talking about is we need to see the price above the shorter term moving average, the 10, okay? Now, if we get above the 10 period moving average, what you're now going to notice is we're trying to climb maybe back up to this high. Now, the earnings on this is on the 27th, okay? Now, we've gone through a process where we've been seeing red lines on the moving average for days and days and days and days, all the way down. And what you're now going to notice is that oscillator at the bottom, if you will, has been pasted in the trend number 1. Oh, okay. Now, it's been for a while. Make no misunderstanding. If you're in trend number 1 just over and over, I mean, just day after day, I mean, sellers are in control. There should be no misunderstanding. Now, lately, what you've been noticing in this case is we've been starting to kind of get to the 2, fall back down to the 1, get up to the 2. Now, what you're now seeing is the price is starting to reverse a little bit. Now, we're going to do a trade on NUE. What type of trade are we talking about? Okay. Now, the investor might say, James, I like to consider selling something, like selling a put option, now known as a cash secured put. If we, for example, said, you know what I'm going to do? I'm going to do like a short put vertical, okay? The short put vertical has a built-in maximum loss. So the ticker, now, by the way, if we look at the volatility, okay, 41%, 37, 42, and so on, we're going to go down to 21 February, okay? Now, what we're going to do is we're going to sell the put or sell a strike of a put where the investor thinks the stock could stay up above. Now, if you sell the 120, the put, and the stock is at 123, I mean, pretty close to the current price, okay? The closer that strike is to the put, well, the biggest actually thing is the bigger the premium, okay? Now, it sounds all great, but the thing is it's not giving a whole lot of room. So statistical odds as of right now, the stock being below that strike as of right now, at expiration by a penny is 38%, okay? So that's almost 50% chance, 50-50 odds, of the stock being below. The investor says, I don't like that. They might choose a lower strike. However, if you are more bullish about your technical analysis and you think there's pretty good odds of this snapping back to the upside, you might choose something more like that, okay? Now, and there's some times where the investor might say, I'm going to go for it, okay? I like kind of what the market is doing, the sector is doing, the industry group, and the stock. And I like the fact that we're seeing a group of stocks move. So step 1, we're going to sell the 120 and then the downside. Now, we harped on this last week about having trades that were defined risk. Did anybody remember us talking about that? Well, it should, because it should have been kind of like, James, I think you went over that a couple times, and that's true. Now, we're going to sell one, but we're going to also take a look at, well, what's the maximum loss given, okay, for this margin account, okay? In the margin account, we don't want to risk really more than, let's say, $300. This is $323. We could do it, but the loss could be $23 more than what we could take. It's not going to be like life-shattering, okay? It's a little bit over. If we went into the single account, multiple accounts, we're going to go say we're going to sell one in the margin, which is we can only do one, but in the IRA, we're going to do 2, okay? Now, we could do about $1,000 worth of risk in the IRA. We're going to do 2 of those in the IRA. So note that. Now, a lot of times, we're going to be trading the same stocks, not all the time. There might be some where we just can't. The margin account is just right around 30-ish thousand-ish. And the biggest thing is we're going to kind of need some lower dollar stocks to do stock trades or option trades. So if I bring up Meta or something like that, can't always do those in that margin account. So 1 in the margin, 2 in the IRA. So first trade we did was STLD. Second trade we actually did, X. We did X. we said we're going to keep an eye on STLD, but then the second trade we did, I just looked at, okay, in our example on the paper money account is the NUE trade, okay, send the order. Now, what I'm going to do in this is I'm going to come back to this, and what you're going to see is what type of order did we just do, okay? So I'm going to go back to, now what you're going to see in this case is, okay, so the filled order was selling the 120, buying the NUE, okay? And there it is right there. Now let me kind of just go back just real quick. That trade, yes, position right there. We just right-clicked on the bid, sell, and I'm just looking at the chats as well. We just said sell vertical. That's what that trade was, and that filled at 180 credit, okay? Now, what I want to do is I want to kind of look and see. No, I was actually reading kind of a lengthier chat, and so I was just kind of like reading, talking, and looking at the same time. Now, it's like having 4 children, okay, and a dog. So we did get filled in the paper money account on NUE, okay, 180 credit. The shares on X were filled at 36.82. All right. Now, I want to kind of go back to also just real quick, one other space. And I want to go back to just real quick is taking a quick look. And I'm just going to show this kind of more quickly. But we know lately, one of the sentiment gauges we also look at is the 10Y, okay? When things are going quite strongly in the economy, where do rates go? If the economy is strong, where do the rates go? Where do they tend to go? Well, the rates, those who are fixed income investors, they tend to want to have a higher rate of return if the economy is stronger and if they're forecasting maybe higher inflation, okay? Now, if I take this chart back to, let's say, and this is very important you understand this because some people trade correlation. If I take this back to a 5-year weekly, and what I'm really trying to grab here is when we're kind of in the midst of, let's say, COVID. Now, I can't go all the way back quite on this product, but if I went back to where we were just coming out of COVID, okay, the interest rate, so when the economy just stopped, and what you're going to see is that when the economy wasn't growing that much and there wasn't a high inflation maybe at that time per se, or at least not admitted, okay, you're going to see the rate was 1.35. When the economy started to grow and the Fed funds started to go up, what you're going to see is the rates rose and so on, okay? So what does this even matter? Well, because if you're trading correlation, you got to be thinking to yourself, what places in the market might be at risk of if rates go up? We actually, for example, see the other products might go inverse. Now, I'm just going to share a couple that I want us to keep an eye on, okay? So if I go to studies, quick study, and compare with, and what I'm going to do is one of the places that if you're an income investor, you might say, James, I like to take a look at, let's say, pull this up on that, okay, 10Y, okay? And what I'm going to do is let's go back to studies, okay? And what I'm going to do is add studies. I'm going to go compare with and just put it right back on IXU, okay? Now, what you're now going to see is there are times where this candlestick chart, it's the interest rates. That right there is the utilities. So there are some times where you can get rates to go up and utilities to go up. However, what you're noticing now is, and you're going to see that sometimes when the rates went down, we also did see in purple, utilities go down. Lately, we've been seeing as rates go up more aggressively, when rates fall down more aggressively, the candle chart, we see utilities went up quite a bit. When rates, the candle chart went up quite a bit, we saw kind of utilities flatten off and or go down. Rates, the candle chart go up quite a bit, we're actually seeing utilities go down quite a bit. So you might trade that. This is welcome to pairs trading. If you think that correlation is kind of more positive, okay? And by the way, we're saying that if rates go up, inversely, that maybe, let's say, utilities go down. Or if we kind of showed a different way, think about what two other areas would be. I'm going to include home builders, but I won't type that in. If we typed in staples, okay, what you're going to now notice is when we saw rates in candlestick form go down, we saw the staples in purple go up. Rates go up in candlestick form, staples go down. And then lately, we see rates go up, and we've actually just kind of seen aggressively staples go down. Now, this will not look any different than if you pull up real estate and also if you pull up home builders. So it's kind of a strategy for your own investing maybe to consider is what maybe has inverse correlation, okay? Where if one goes up, what areas might go down? Or if one area goes down, what might go up? You should have some of those things written down to say, I've seen a relationship on this, okay? So that's kind of one thing. And by the way, so kind of a couple right off the bat would be rates up, utilities down. Rates up, staples potentially down. Rates up, we would also include with that real estate down, staples down, and utilities down. When we say real estate, we would be also saying home builders as well. Anything sensitive to rates rising. And that's important because it's really the cost of their borrowing, okay? And they use the rate going higher is their financing cost, okay? And the higher the financing cost, the less advantageous that investment might potentially be, okay? Now, what I want to do is I want to spend just 5 minutes or so, and I want to bring back up just real quick the energy space. Now, when we take a look at this real quick, what you're now going to notice is we've been talking about kind of energy, and one other stock that I kind of just want to bring up as well, okay? And by the way, if you don't have this chart, we use two main charts. This is the second chart that we use quite a bit. And the purpose of kind of using this chart is the color of the candles are telling us what type of trend we're in, okay? Now, what you're now going to notice is the energy sector did cross the 30-day simple moving average, which many of you asked, and that's what I'm talking about. And I want to go back to the example we did just real quick this morning. We did the example of ConocoPhillips, where it broke above the bottom end of the channel. And that top end of the channel is about right there, okay? Now, one of them that I want to bring up, okay, just a couple stocks, we're seeing Baker Hughes, having a pretty good push to the upside. So I've had a lot of questions on how do you see reversals? Well, remember, my answer has always been consistent. Whenever you see orange and purple and red color candlesticks, that's the flag, okay? If you start to see, for example, lighter color green candles, that is the start of a reversal. If you start to see those lighter color candles turning into dark green candles, the reversal is just continuing. Now, what happens if you only get orange and then purple and then it breaks out? Shallower pullback. What happens if you get orange, purple, and then red? Deeper pullback. Which one do you want? Which one do you think? Okay, if you were the owner of the stock or you're trying to get in on momentum, stronger flag, you'd say, give me something that only goes orange and purple, okay, and not red. If you get red colored candles, the price is below both moving averages, which means it's lost quite a bit of momentum, okay? Now, so keep an eye on not Berkshire. Why do I keep saying Berkshire? Baker Hughes, okay? Now, what I'm going to do on this one, I'm going to hold that one because the one I really want to look at the example of is SLB. Now, Schlumberger, if we look at this, has been sitting right on its 10-day exponential moving average, and it's kind of doing a bullish engulfing right at the 30-period moving average. Noted that's downsloping. However, it's sitting above the 10. So if someone said, James, I'm going to do a bullish trade on this, wonder if the investor said, James, I want to maybe buy the shares of the stock, but I also at the same time wanted to buy downside protection. You guys remember what that was called? You buy the stock and you buy the protection. It's called a married put, or buying the stock with buying the put. Buying the put is for a certain duration of time. You pay for it. And it gives the investor the right to sell at the strike price from now to expiration. Now, what we're going to do is we're going to go to the trade tab. Okay? I'm going to go to the trade tab. I'm going to type in SLB. Okay? So step number one here is we're going to buy the shares of the stock, the underlying asset. Okay, not too uncommon. All we did, trade tab, SLB, click on the ask price. Not too bad. Underneath here, there's the row for the shares. Now, the problem is there's no downside protection. What we're now going to do is we're going to put this in the margin account, and we're going to go to the 21 February with 39 days remaining. We're not going to go to this expiration, this one, and so on, because these are the ones that have higher implied volatility. We want to go to the ones that have lower implied volatility since we're paying for the pet. Okay? Now, why does that matter? Well, whatever you pay for the put is how much the stock needs to go up to break even. So, for example, if I bought the put, okay, first thing, if we have that row right there, we're going to go single order. First trigger is SEQ. And then what I'm going to do is I'm going to come to that 37.5. That's the strike below the current stock price. Yeah, there you go. Buying the shares of the stock, buying the put. And if we bought that put for, let's say, 80 cents, I need that stock to go up 80 cents to get back that potential loss of the 80 cents for buying the put. Okay? So if this stock were to gap down to 20 bucks, contractually, we have the right to sell the shares at 37.5. So and that would become valuable, highly likely, or would. Now, if the stock gaps up to 44, where's the gains? The gains are in the shares. But what happens to the put if the stock gaps up to 44, goes up to 44? Well, this should become less less value, because if the stock goes up, the chances of the stock being below that strike at expiration becomes less. But where's the gains? It's in the shares. Okay? So a lot of times people around earnings will say, man, I'm not going to buy shares of stock because it's risky. Okay? Well, sometimes what people do is they say, well, can I buy some puts underneath that might not be super expensive relative to the cost base of the stock, and that way it doesn't cap the upside. This gives us a defined risk, but has unlimited upside potential. Okay. And closing this out, notice to buy the shares of the stock, not a commission. The commission is on the one contract for the put. So that's the third trade we did here today, Schlumberger. So earlier on, we did ConocoPhillips. Second trade we did here today on oil is SLB. Two steel trades we actually did was on X and also NUE this morning. So a little bit more commodity base here today. We also talked about correlation as well, and we also brought up sentiment gauges. Now, what I expect out of you is to go out and practice looking at those sentiment gauges. Look at the relationship to the VIX. Second, to write down some stocks or maybe some correlation trades that you like to think of. What has maybe an inverse correlation where if you went bullish one, maybe there's some opportunities to go bearish or vice versa. And then lastly, we brought up some stocks that are kind of bucking the trend of the market in general. Keep an eye on the agricultural space, steel space, and the oil space slash natural gas. So I'm out of my time here today. I want to say thanks to Scott Thompson for answering those questions in chat. Want to give you a quick reminder that if you have not subscribed to the Trader Talks channel right on YouTube, there's the page. Right in the middle of your page, the link to it, click on it, subscribe if you have not done so already. Coming up next, we will have trading cover calls and short puts with Cameron May. So stay tuned for that. And also remember that if you say, hey, James, is there a playlist for this class? Yes, it's right there. Okay, in the link, you can go back and look at our past classes of what we discussed. Those have been recorded. I want to thank you so much for your comments and your participation. And remember, with what we discussed 3 main points here today. And the words of the week are correlation, sentiment, and reversals, outliers, if you will. So this has been the class on trading with technical indicators. Thank you so much. Stay tuned for Cameron May coming up next. Thank you so much, and bye-bye.